And good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Thursday, December the 15th, 2022. The wave count continues, and with both the S&P and the NASDAQ catching a little bit stronger downdraft today. And that was to be expected. Although as I left it yesterday, the way that the market was left, we had three waves down off of that 4180 high that we reached on Tuesday. So just to catch up with ourselves, this was a reaction to economic data. This was the result of that rise. It was rejected. This was the point we got to when the, actually, I take that back. This was the point that we had gotten to when the Fed made the decision and let the world know, giving us a 50 basis point hike yesterday. And initially that was thought, okay, that came in as we thought. What should we do? Let's try to rally. We didn't make it. And then we just proceeded to drop right into the close, rallying back slightly after the bell. And we came in today, we had a slew of economic news, and it truly, I watched for a while after all this news came out, and the market really just didn't have any clue in this. So they were trying to determine, how do we want to go about this? Are we really going to start to factor in all of the statements made by the Fed chair? Are we going to really consider what is now being said to us, that interest rates are not going to start coming down, that inflation is not under control, but they're going to stay firm and they're going to try to meet their goal, which is to get inflation tamed and back down to a target of 2%. Now, hallelujah to the Fed for having the tenacity to kind of go forward with their plan. Again, I'm going to tell you, not that I am a Fed governor, not that I have a high degree in economics, but from my understanding of inflation, you don't try to fight it by running up behind it. That you have to fight inflation by meeting it head on. So you must get in front of it. And the only way that I know to get in front of it is to just have the interest rate higher than the inflation rate. Now, granted, the last couple of months, we have seen where the CPI and other data has started to indicate a little bit of a loosening of its grip, and that prices are beginning to adjust or come down. And so we are seeing little cracks of where we might catch a downdraft in terms of inflation. But we might, and that we will, or that we are, as three different things altogether. So I think the market just kind of took that all in stride and digested it and realized, nope, we still have a ways to go. And therefore, so do all of these companies, et cetera, et cetera, et cetera. And they took them to the woodshed today, I got to tell you. And particularly the large tech stocks, which are very interest rate sensitive, by the way. But also what's being revealed is just the levels at which the market and its participants pumped tech stock price. And then suddenly when we get something that says we're a little bit overpriced, it just gets taken out to the woodshed, like I just said, and gets beaten to a pulp, basically. For example, Apple down 671, was down lower. So after running up to 152 last week, we're now back down at 136. AMAT down 5, AMD down 2.5, Amazon down 3, etc. Google down 4, and here we go. Meta ran it up above 120, now traveling back down closer to 115 than it is to 120. Then we have Moderna, which actually didn't do so bad today. They play around up and down, but continues to hold the good news, even though it made an adjustment and corrected a little bit today. Microsoft Yesterday, Microsoft traveled and got itself above 260. Today, it dropped below 250, down 8. Netflix comes out and tells the world today, you know, we didn't really get the revenue from the advertising, so we're going to give that money back. Bam, stock's down $28. NVIDIA, bam, stock's down 7. So, and even Tesla was trading closer to 150, managed to rally back, but still finished pretty much unchanged on the day at 157. So again, we're seeing these adjustments. They're being adjustments for inflation. They're being adjustments for how are they going to do coming up into the new year? What are their earnings going to be like, et cetera, et cetera, et cetera. So the wave pattern continues to stick with my preferred count that I have presented and continue to. So it remains my preferred count. And as I discussed yesterday, I have put that intermediate wave 2 label up here with the C wave, indicating that we are in the beginning stages of a intermediate third wave down. Now let's just take a very quick review. What's inside that intermediate third wave? 5 waves of minor degree. What's inside that first wave down of minor degree? 5 waves of minute degree. Remember, Elliott wave are building blocks. And if we're going to start from the top and work ourselves down, we have to consider what's inside of each one of these building blocks. We're back into where we're seeing the trend resume. The trend is down. Been that way since we put that top up here at 48.08. That was the top. And right now, it remains the all-time high for the S&P 500. So we are in the process and have been in the process since that high, so all year, of unfolding in a very large supercycle wave 4 correction. Now, we've already determined that the first fib level for that supercycle wave 4 is 2980. And that's when me running just straight retracements from the low in June of 1932 to the high in January of 2022. That's a lot of time, folks, right? So the first support area, 0.382 of that huge move, is 2980 in the S&P. In the SPX, actually, but I'm going to bring it over and I'm using it here in the futures market as well. So there to just a little bit lower is where I am believing that we will put in that low, right? Because we're in an intermediate third wave of a primary C wave down. So I can take it up one level and go like, well, what's inside that primary degree C wave? 5 waves of intermediate degree, of which we've done 1 and 2. We're in the third. So we're getting there. We're past the halfway mark now. We're dropping down through that halfway mark of getting to the low of primary wave C, and in turn, the cycle wave A. And at that point, we're 1/3 through this larger supercycle degree corrective phase. So essentially, first year, we're done with the third. So if I had to look at it that way, well, maybe this whole thing is going to really roll out through 2024. Now, what are they telling us when we listen to a lot of the economists, and we hear a lot of market technicians and everybody else kind of talking about 2022, 2023 out to 24? Wow, how that all fits. Isn't that kind of interesting? So as we reach the bottom of this particular wave, which we could do by the end of the year, beginning of next year, we'll be 1/3 done. The next third will be that cycle degree B wave counter trend rally. And I promise you, folks, that when it hits, we're all going to want to be long. We're all going to want to be working it from the long side, because it should be one humdinger going up. and it'll come in an A, B, C form, the structure. So again, let's keep in under track here. Our corrective waves, our countertrend moves are letters, A, B, C. The impulse moves, the direction of the trend, are numbers, 1, 2, 3, 4, 5. So here we sit, beginning stages. I always err towards not counting the move too fast. So I'm going from the minute degree for this intermediate third. If I'm believing that this intermediate wave 3 should, let me put one more piece of information on this, and that is just so that I can put it on so that we can see. These are going to be the extensions for that third wave. And what we do is we go from the top at the beginning of wave 1, which is up there at the August highs, to the low of wave 1, which was the October lows, up to the wave 2 high, which was yesterday. So that was here in December. So looking at that, where we have 1.618, a little bit too low. So I'm thinking that we might get down to 33.50 for wave 3. It's going to be equal to wave 1, so I'd like it a little bit longer. So, but this internal wave 3, maybe we get down here, maybe down here, possibly all the way down to there. We get a minor 4 and 5, and then we put in intermediate 3, do another intermediate 4 and 5, get down into here. 3,000 to, actually, I'm going to call it all the way down to 28.40, but we have 3,000 to 29.80. Strong support, very strong support, and then a little bit of throw over, should it be serious enough when we get down there, 28.43. Then we get to put in that C and then the A and set the stage for this beautiful rally that could come back all the way up. Okay, so bringing it back down to that hourly chart, what can we start to look for? Or obviously we're all the way almost through with, now again, I'm going to let you know that this is either going to be the subminute wave 3 or it could be the minute wave 3 completion here. I got to let it play out. Right now, it's kind of looking like that is the subminute 3. We got a subminute 4, a subminute 5. Doesn't have to do much more than what we've already seen, but just get down maybe to 3,900, drift maybe down to 38.78 or somewhere down in here. Finish this minute third. We get another 4, we get another 5, and then we've got minor wave 1. And maybe minor wave 1 brings us into 38.64, which is the 382 of that larger, of the entire intermediate third. So minor wave 1 comes 382, works out perfectly. Then we get minor wave 3, and that might bring us down to 37, maybe 3,700, maybe even 36.69. Then we get a minor wave 4, minor wave 5, bringing us down to 3,500, 33, but I don't think so. I think more up here. Then we're done with minor intermediate wave 3. We get an intermediate wave 4, intermediate wave 5, and that's the one we're thinking to bring it all home. Bring it on home for us between 3,000 and 28.43 downside. We do have these support levels as well, but they may come into play as we're rolling out in intermediate 3. So that's kind of just like a little bit of a forward look. We will, of course, hone in on different levels as the pattern unfolds, and we have additional points of reference in producing some additional fibs. For tomorrow, I am thinking that we might get a little bit, that could happen overnight, get a little bit of an up move to complete this small wave 4, come down in a wave 5, and then again, right? Because if it's going to be 1, 2, minute 3, minute 4, minute 5, minor wave 1. If we can get all that done right up into this cluster of support, then we're going to do a little bit larger, right? A minor wave 2. What's going to be the structure? ABC. This was an intermediate wave 2. Now we're looking for a minor wave 2. These are minor waves. So they can be a little bit larger, and that's what we'll be looking for once we get the minor wave 1 in, get a minor wave 2, nice little ABC, and then drop much stronger in that minor third. Now, whether that comes out next week or whether that comes out the week after, we will see. But that's going to be the path that I believe the market should be taking. All right. All of our moving averages are right on top of this. Now, one of the major things I want to point out today is that we broke below, and this is overnight, hourly chart, we broke below that 200. We got the 50, we got the 20, we got the 8, and we got the 4, all pointing sharply lower. All right. And the 200 now cresting and rolling over. The 50 broke below the 200 on the hourly chart. And take it up to the daily chart. Now we can take a peek at what did the moving averages do here. And we closed the daily chart. We closed below the 50. That turns that daily chart to a negative or a more negative pattern. These are important stepping stones, I should say, that will continue to confirm direction, confirm our count, confirm what we can look for in coming up. Now, it just broke below, and you can see already in the opening of the Globex session, they want to go back to their security zone, which is going to be above this 50. If we do that and it closes above the 50 tomorrow, then it could change that picture all over again. Right now, we got a little bit of a negative going via the daily chart. And that's going to be it for the S&P right now. Let's go over and take a look at the NASDAQ. Pretty much the same deal. Here we go. Once again, intermediate wave 2, the C wave. All done, all nice, all tagged up. We're coming off in 5 waves of minor degree, all going down, right? 1, 3, and 5 will be down, 2 and 4, 2 corrects 1, 4 corrects 3. So we got our downside pattern in place. Now, minute 1, minute 2 of that first minor wave 1, right? Then it starts to break, as a third wave should. 1, 2, 3, those are all subminute 1 of minute 3, subminute 2 of 3, subminute 3 of 3. We get a subminute 4, and I'm telling you, here it is again. We get this where it's starting to look like a triangle. We've seen how that didn't work, right? So I'm hoping that they catch on that they need to put in a new low before they decide they're going to rally. But my thought would be that we head down, and that these all still remain a subminute degree. Hopefully that'll play out. So I'd be looking for a new low below that. Same as I did before. Let me go up one more. Actually, I can put the first one on here, and that would be for the minute third. Could have done that over there too. So minute 3, we're heading down towards 11,273. So 1.618, but actually anywhere in there. So we're pretty close. We're pretty close for this minute third wave. And how do I measure it? Minute 1 to minute 2, and it gives me the relationships between this third and this first. We've already surpassed the 100% mark, and we surpassed 1.236. 1.382 might contain this third. We get a little 4 and a 5, could contain the minute third. I think we go a little bit below it. Then we get the minute 3 done. We do a minute 4, minute 5. We're done with minor wave 1. And I'm suspecting that could come in right about in here. So downside not over, but once minor wave 1 is done, remember that we have a minor wave 2. It'll be an ABC. This is what it looked like on the minute degree. The minor degree is going to be larger. Still an ABC, but larger. And it'll take a little bit of time. So that's the NASDAQ. Now, one more that I'm going to add. I'm going to go out to that 4-hour chart and let's put in that slightly larger, also extensions. We're going to put that there. Oops, didn't like that. Neither did it. So let me go, come on. There you go. I just want to put it on, draw. There you go. Going down to the bottom of wave 1 to the top of wave 2. There we go. Now, those are going to be on the inside. It's going to be a little bit tough because we've got a whole bunch going on. So, yeah. Minute or minor wave 1, I'm thinking is going to come in maybe down here at this 50% level, but I'm looking really inside here. 11,095 would be nice. But we got to get through a lot of stuff in between. So that's minute, subminute 3, subminute 4, subminute 5, down into here. Subminute, that is minute 3, minute 4, minute 5, maybe down 11,200. We're going to have to wait and see because structure is going to be more important than actually where it reaches. So these are just guides. But we got a little bit of overlap right here, 11,900-ish, 11,100, I'm going to say, down to that 11,100 area for the completion point of, I'm going to say maybe minor 1. Then we get a nice minor wave 2, and off to the races we go. Now, here we have inside. Where can we look for it down here? For intermediate wave 3. Intermediate wave 3 would be 100% of intermediate wave 1 at 9,083. I would like it to come down below. It's normally the longest and the strongest. Okay, let's do it. So you can see that 1.618 is 7,000, and that would just be the intermediate wave 3. Then we got an intermediate 4 and 5. Well, so that's why I think it might come in a little bit higher. But that would be the normal level. Then an intermediate 4 and 5 could bring us down maybe only to there. Remember, what ultimately I'm looking for is for this A wave to finish up down here, right? Primary C, cycle A, to finish down here. And that's 66.28 right there. That was the low of the pandemic low, right? Primary 4. What are we looking for? We're looking for this cycle wave A. Well, I'm thinking that's where it should kind of come in on the primary degree, 4th wave. There it is. But the whole price territory comes into play. So it's not going to take long. Now, once we start dipping minus 10,000, we're entering into that price territory pretty quickly. The price territory of the primary 4th wave. So anywhere in here is where I'm going to start looking for the completion of the primary C wave. But all will depend on how this all unfolds. Again, structure takes precedence over fibs. Fibs guide us. Fibs provide the support and resistance. And we're going to stick with that. Here again, look at our moving averages. The 50 also in the NASDAQ on the hourly chart, busted right across the 200 and pointing hard down. The 20 pointing hard down. The 8 pointing hard down. The 4 pointing hard down. Starts to kind of crest a little bit or just circle, put in a little bit of U-bottom there because we're in a little bit of a bounce. I do believe we still have more downside. Now, tomorrow, Friday, expiration, it's a quadruple. So everything, we've got bonds, Forex, commodities, and equities. Futures, everything. Everything's got an expiration cycle that's going to go off tomorrow. Economic numbers, we have the PMI Composite Flash at 9:45. Market gets to open, then we get that. So let's try to remember. I hopefully will tell it again. If you're in my trade room, I'll be saying it again in the trade room. So just so we know, because the last thing we want is to be caught in a position while they do this quick run up and down. It can really kind of upset your day, particularly when it's just starting. But that is tomorrow morning. And that's really going to be it. Everything's progressing according to schedule. What about my alternate views? They are still there. And I'm going to let tomorrow, of course, come and go, leave its mark. And then I will be doing a podcast, an Eye of the Storm podcast, which will update all of that. And I'll be doing that on Saturday. It likely will come out later as I do some volunteer work, and it's at a food bank. And Saturday is our big day because we're giving it away for the Christmas, which comes the next week. So, but I will get it done on Saturday and get that published. And that's going to be it for right now. I'm going to wish everybody a very good trading day tomorrow. Stay on your toes. Again, quadruple expiration. The fact that we nosedive today may smooth things out for tomorrow because a lot of adjusting has already taken place. But if we continue to move around either direction, then those strike prices that the markets will be running through up and down force position holders to adjust their positions. Have a great trading day tomorrow. Have a great weekend ahead. Get lots of rest because I think the road gets pretty rocky and there'll be a lot of exciting, good trading to do. Our next update will be on Sunday, December the 18th.